Okay, so this was a mini disaster, as Dan Ives put it yesterday from Wedbush Capital. I'm going to put it as a strange day for Tesla shareholders, and I'll explain. So Tesla missed on everything, EPS, on revenues, every single metric, and the share price dove off a cliff, as we saw. And in this video, I'm going to explain what was good about the call, what was bad about the call and the numbers, what's the meaning for Tesla going forward, and what my thesis is as far as an investor. Am I buying? Am I selling? Am I holding? What this whole thing means. And we're going to do it objectively without, oh my God, the sky is falling. Or on the other hand, okay, this is the best thing that could have happened, and spin this into really, really great earnings. Because I don't want to play that game and I don't want to play that game. I want to give you the objective numbers. I think this is why you come to my channel. So let's start with the first thing. I think the main thing that I was looking forward in this call is FSD, full self-driving update. I wanted to see a clear schedule. When is the finish line of this thing? We didn't get it. So this was number one. The second thing that I think freaked out some investors was that the margin compression was worse than what we anticipated. In my video yesterday, I said this is the second thing we're looking at is the margin compression, and this was worse than all of us thought. And again, that was the second why investors freaked out. The other thing is beyond the margins and no FSD, we did get Cybertruck schedule, which was great in November. That's perfect. But Elon also mentioned the fact that the macroeconomic outlook for the auto market isn't great. And with higher interest, the price of an automobile, or at least the lease of an automobile, becomes so expensive that demand is going to be, a little bit troublesome. So with macro outlooks and high interest not being the greatest, you're looking at more price pressure for Tesla. And that's important to note because from what I understand from the call, this isn't going to get resolved anytime soon. At least not for a few quarters. So in the short term, this is what we expect from Tesla. And I got to be real with you here. Number one, further margin erosion. For sure. That's going to continue. The second thing is further growth slowdown. That's also going to continue. If you're going to less sell cars for less price per vehicle, you're going to suffer on growth and margins. So for the short term, we're going to see a slowdown of growth to 20 to 30%. That's just natural. Now, ultimately, I think what drove the share price to a knee-jerk overreaction was that Elon was absolutely self-sabotaging the call. I don't know why he was such in a shitty mood, but he really didn't come in with a great mood for this call. And I think everybody just dove off a cliff because of Elon having a bad day. It is what it is. Look, I'm not going to buy or sell stock because Elon sabotaged his own call. This isn't the first time he did something like that. He's not the most rational guy when it comes to these things. You have to take the good with the bad when you deal with Elon Musk. Now, let's talk about the meaning of this. Number one, it means that from this point on, for the next 12 to 18 months, Tesla has to be way more strategic and surgical with its price cutting in the manufacturing. It has to, because the margins will depend on it. Number two, the Cybertruck ramp is now more important than ever because that's the next kind of S-curve they have, because that demand isn't slowing down anytime soon. Lots of pre-orders, lots of demand, lots of excitement. This is the biggest category in the North America auto market, right? The Cybertruck is in the pickup trucks. That's the best category to sell in. They're going to sell a lot of Cybertrucks. So the ramp up there is going to be very, very critical. Number three, you have to focus on FSD. We're talking about 80% gross margin, licensing, lots of TAM, lots of money, lots of margin is hidden in FSD. So to close that is going to be very, very critical for Tesla. Now, on the financial side, look, Tesla is sitting on $26 billion of cash, which is a mountain of cash with very little debt. They really don't have any interest exposure like other companies do. Ford and GM have lots of interest exposure, which is good. The cash flow is great. They're going to invest a lot of money in R&D to make the cars better, to cut the costs of the manufacturing process, which is always good. And in bad times, you're going to see slowdown in the industry. But ask yourself this question, right? How will it impact Ford and GM and all of the others? I think Tesla, out of them all, will do the better, but it's still going to be a very iffy kind of 12 months, if you know what I mean. So the next 6 to 18 months are going to be very, very bumpy, probably closer to a year. Now, Dan Ives actually lowered his price target for Tesla to $310, which is still significantly higher than what we are right now, $220 as of the making of this video. I don't think that, the sky are falling and everybody just needs to chill. This wasn't the best earnings we've seen, and it definitely had a lot of issues. But the sky are not falling, and Tesla is still a great investment, in my opinion. Now, one of the things that impressed me the most and got really not a lot of coverage is the fact that the cost of goods per vehicle, COGS per vehicle, went down quite significantly over the past few quarters. And you've seen that they went from $40,000 per vehicle just in Q4 2022 to $37,500 right now in this quarter. So they're cutting costs and they already have the best margins in the industry. That's actually a very encouraging sign. So the fact of the matter is that Tesla is actually delivering on the promise of getting into the cost cutting of the manufacturing process way, way faster than the other guys. I just want to remind you, all the other guys, they can't make an electric vehicle that actually is profitable. All of them are losing money on every single EV they're selling, except Tesla, and they're cutting costs. So in this whole, meat grinder that will be the next year and a half of bad macro and high interest, Tesla is probably one of the only ones who will come out of this sparkly clean. Again, not as good as everybody anticipated 3 or 4 years ago, but definitely better than the rest. Now, look, I think Elon is overplaying the macro a little bit. I think I got him figured out. He wants to over-deliver and under-promise, or rather under-promise and over-deliver. So I think if gas prices remain high, which it seems like they will with everything that's going on with OPEC right now and the global geopolitical nonsense and all this insanity. So if gas prices remain high, Tesla is going to sell more cars than, internal combustion vehicles. They already have a leading position in EVs and nobody comes close to them. They have the leading position in FSD. They will be the first one to come out with an actual full self-driving. The charging stations is a huge, huge monopoly, which they already kind of conquered. Now, look, just go back in history. In 2015, just 8 years ago, this company was making $940 million. $940 million per quarter. Right now, we're talking about $23.3 billion. So we're talking about a 23x. 23x. That's absolutely insane. So within 8 years, they 23x the revenues. We're still having a debate if this is a good investment or not. Look, at the end of the day, EVs are going to sell a lot. Who comes in second? I don't know in this market. There isn't a single Tesla killer in the horizon, not on the, as far as the specific model that is a Tesla killer, not a specific company that is a Tesla killer, and don't give me all this BYD nonsense. So looking on the horizon, I'm looking at the best company in the best industry, which is going to go through some hard macro environments, but they'll come out on top, I think. So at 220, plenty of cash, a mountain of cash in a pole position, I'm buying. My 2 cents about it. Obviously, this is not financial advice. You have to do your research. You have to decide for yourself based on your parameters and your strategic decisions. And to help you with that, we actually have a few spots open in our academy to teach you how to do your own due diligence, how to do your own DCF, and basically teach you how to become a better investor. I'm going to put the link to that below, Tom's Academy, in the description or our Patreon, and we'd love to see you there. It's a 30-day money-back guarantee. Try it out for 30 days. You don't like it, you get your money back right away. And I will see you there, hopefully, right when you sign up. See you next video.